Hi guys! Today let's talk about which time frame should we use for the development of our trading systems. And if you have not already done, please click below and subscribe to our YouTube channel. Well, I'm Francesco Placci. I'm in charge of the research and development of systematic trading strategies for the Unger Academy. I said systematic because what we do is to teach traders a way to become profitable without spending hours in front of a monitor. But let's talk about today's topic. Which time frame is better to use to develop a trading system, daily, weekly or intraday? And what are the differences that derive from the use of these time frames? Starting from the weekly time frame, we can say that is generally too slow for systematic trading, for our type of approach. Obviously, there are exceptions, for example, seasonal systems that work over long time horizons or asset allocation models that can use the weekly time frame. Also, rotational trading systems on stocks often use this type of time frame. These are all systems that keep positions open for several days, while generally speaking, our approach is more a short-term approach. For this reason, in this video we will mainly focus on the intraday and daily time frame. The first thing you notice when working in intraday is more background noise. This means that it's more difficult to find market inefficiencies because market movements are erratic. For this reason, even when working in intraday, sensitive market points such as open high low close or volatility are generally identified using the higher time frame, which is the daily one. In fact, the daily time frame is cleaner because the background noise drops, and it is easier to spot market inefficiencies. As for the programming aspect, it is generally more difficult to program on an intraday time frame. This depends on the fact that, referring to a superior time frame, it is necessary to insert additional time series or to make use of programming constructs more complicated than a simple variable, such as, for example, arrays or lists. There is therefore a greater difficulty of programming, while instead using the daily time frame, the coding is much simpler and faster. For this reason, we can say that the daily time frame is more suitable for a quick view of the market, to verify the presence of any edge, or to deepen the knowledge of a specific market. The back of the coin is that the intraday time frame allows us to have more precise, more reliable backtests. Why are there inaccuracies using the daily time frame? This generally depends on the fact that the platform is not able to understand how the prices have moved within the single bar. Did a stop loss or a take profit come first? In these cases, it is possible to use a multi-charts feature called bar magnifier. This feature allows multi-charts to check how prices have moved within the single daily bar, and this allows you to increase the accuracy of the backtest, even using the daily time frame. This is a very important aspect because it is a very common mistake among novice traders. Let's take an example. This is a simple trading system that enters the market when prices break the 5-day high or low. Positions are closed at the end of the day or using a take profit or a stop loss. This is the beautiful equity line of the system, which seems to be very effective. But let's see what happens if we activate the bar magnifier feature. Now we are telling multicharts to check how prices have moved within the single bar. Let's take a look at the equity line. As you can see, it is a very different picture. So please do not underestimate these aspects, especially if you work on a daily time frame and you don't know the suitable stop loss or take profit for the underlying. Another type of error that can occur when using the daily time frame refers to the close of the bar. Does this correspond to the last market price or to the settlement price? When we build trading systems, we have to rely on real prices. We know instead that the settlement price is unreal. It's a sort of mathematical calculation and therefore we cannot use it. A backtest based on the settlement price will return unreliable results that do not correspond to reality. A positive aspect of using daily bars is the speed of code execution. The platform have to process less data and therefore all processes will be faster, such as the optimization process. So obviously, if we work intraday, we have to expect longer processing times. However, working in intraday, we have the possibility to test conditions that it would not otherwise be possible to test working on a longer time frame. I refer, for example, to intraday biases. Prices tend to rise or fall in certain time bands. In the same way, using daily time frame, it is not possible to use patterns that use conditions deriving from the current prices, such as the high of the current day. It is not possible to test multiple entries or exits, and it is also more difficult to use custom sessions. So, in this case, the intraday time frame gives us a big advantage, allows us to test and use conditions that often bring important benefits to our trading systems. Generally speaking, we can say that the systems that use daily bars are generally swing trading systems that are in position more than a day, that work mainly on stocks, but also sometimes on futures. The intraday time frame is instead mainly used on futures due to the leverage effect, which makes it preferable to stay in position as little time as possible. For this reason, it is suitable for low-capitalized traders, because staying in position for a short time allows you to reduce drawdowns. In fact, we know that both the average trade and the drawdown increase in the proportion to the increase of the time frame. Therefore, daily systems have a greater average trade and at the same time a greater drawdown. And for this reason, they are generally used by well-capitalized traders. So, having said that, what are the conclusions? I personally believe that if you don't have a good knowledge of the market on which you want to develop a trading system, starting from the daily time frame can be very useful to understand the dynamics of the market and find usable edges. Anyway, once you find something interesting, you need to move to the time frame intraday to have a more reliable backtest and at the same time to test those conditions that cannot be verified using the daily time frame, especially if your intention is to keep the positions open as little time as possible, because you are not building a swing trading system. I hope you enjoyed this video, and if you have any questions, don't hesitate. Leave a comment and we will reply as soon as possible. Well guys, if you want to learn more about how to find your edges in the market and how turn them into automated trading strategies, I have some resources for you. The first one, you can find the link below, is our fantastic 1-hour free online webinar, during which you will see the steps to build your trading system and become a profitable trader, how to find an edge over other traders and professionals in this sector, and how to build a well-diversified portfolio of trading strategies. 2. If instead you would like to speak with a member of our team to analyze your situation and to get some sort of personalized advice, click on the second link and you will be able to book a free 45-minute call with one of our experts. And finally, if you liked this video, join our channel. Thanks for watching.